Welcome to Markets Now. I'm Cheryl Rook, along with Randy Martinson Ag. We're seeing some higher prices, except for the cattle market this morning. And Randy, let's talk just a little bit about the grains, a little bit of a bounce here. But in the case, especially the corn market, we're kind of watching wheat. And is some of that just some short covering? Are we oversold there?
I think so. I mean, we've seen these markets get beat up, and we saw the wheat, go down and try to test their recent lows. Corn did test their recent low. Even soybeans seeing a little bit of pressure too. So I think all the markets have kind of run their course on the pressure side of things, and I think we're seeing a little technical correction at this point. Nothing major. It's just that I think this market is just trying to stay range bound until they figure out where the fall harvest is going to fall.
Yeah, I was going to ask you how much harvest pressure that you anticipate here in corn and soybeans as we move forward.
Well, right now I wouldn't expect a lot more going forward here in the short term. I mean, we got some pretty good rains that are in the forecast. If they develop and come into play, I think that's a little bit supportive to the market. It's not going to be a big supporting factor, but if we slow down harvest, that certainly is going to cause some concerns about losing bushels. And with beans, that's something that bean market can't take.
Right. And beans right now, is there some thought that yields are going to go up or down from here, you think?
Well, I think everybody's worried about what we saw in the wheat market. Both the winter wheat and the spring wheat saw better than expected yields. And I think that's the concern in soybeans, is that that's something that could play out yet as well. We're still in the infancy as far as harvest is concerned, and we're still hearing reports all over the board for where the yields are coming into play. But so far, there's been nothing that's been, stellar. A lot of it has been average or a little below average.
And the soybean market, technically, we took out the 200-day moving average this week. We've been holding the 100-day. Is that going to hold? That's right. We're about 1304.
I think at this point, and it's also, that $13 level is pretty psychological as well.
Sure.
And, I do think we'll stay above that line until we get deeper into the harvest. And if we start seeing some better than expected yields, then I think we could test the summer lows.
So wheat, the bounce there today, is that all technical, you think? Or I know the dollar might be just a little bit on the weaker side.
I think most of it is technical. I mean, we beat up the wheat market pretty bad. We're virtually done with the harvest in spring wheat. This market never had a post-harvest rally. We're still seeing world tight stocks. So wheat really should see a little bit of a bounce, and hopefully we can kind of get it together to show that. The one bad thing is we just don't have the demand.
Then we've gotten some pretty good rains in some of the winter wheat areas, haven't we?
We have, and I think that's what pressured the market early on, is the rains that were moving through the southern plains, which is certainly going to help any newly planted and the wheat that's going to get planted here yet this fall. So that is one of the negatives. I think we're going to see lower acres this year of winter wheat because of the harvest, or because of the base price for insurance is about 20% below last year. But there isn't a lot of cost in planting wheat either in the fall and seeing how it comes out in the spring.
Should have asked you when we were talking about corn and beans, but sell or store strategy in terms of marketing.
Right now, I think, wheat and corn are right now still sells. I mean, you got carries in the market, you got poor basis levels on the wheat. So that's the two markets I want to still try to hold on to and keep in storage. Soybeans, I think, is a sell. That's one I think we need to make some cash flow, and I think beans are the better market. There, I think I would look at marketing and then look to re-own once we hit some harvest lows in early October.
Cattle market is setting back here today for the third day. We'll see if we hold that lower bias, I guess. But is the market a little nervous about the Fed announcement here today?
I think they are. I mean, yesterday, we had the cattle markets higher. We set all-time new contract highs Thursday and Friday. Even we looked at Tuesday, we were going to see some pretty good run again, and the market turned. I think they're worried that the Fed is going to look at increasing interest rates another quarter point here today. That's my bet that they will, just because of how strong inflation is yet.
Plus, we're worried about the government shutdown, aren't we?
We are. I mean, the end of the month looms pretty heavy on the market. And I think that's even impacting the grains a little bit is, if we don't have some sort of a continuing resolution passed by September or 30th, the government shutdown, that I think is going to create a little bit of havoc across the economy.
So what are you looking for today technically? If we close lower, what area do we need to close into to confirm a key reversal, or doesn't it matter because we've had key reversals before we've negated?
I don't know if it matters at this point. I think this market is just still marking time until they get a little more fundamental news. I mean, it's been kind of quiet as far as major driving news in the market. And even though we've seen some activity or some escalation in the war, even in Ukraine and Russia, that headline seems to be kind of fading. And we had some shipments out of Ukraine even, and that pressured wheat a little bit, but it didn't hold it very long.
And let's talk a little bit about the hog market. Testing the upper end of the trading range here, but if you look at a chart, we're still pretty range bound. Do you think we can pop out of the top side of this trading range that we're in here in hogs?
I think we got a chance to. I mean, if cattle continue to stay strong, I think that's going to help. The fact that China is, now bought about 10% more than last year as far as imports for pork, I think that's somewhat supportive. We've got a Hogs and Pigs report coming out at the end of the month that I would bet isn't going to show any expansion. So we've got enough fundamental reasons to see hogs continue to see some strength.
Yeah, and the cutout values have held together really nicely, still above $100. You mentioned Hogs and Pigs report. I didn't ask you about cattle on feed report. We also have that out on Friday too, right?
We do. That's right. We got a cattle on feed report coming out, and that might be putting a little pressure on, as I would expect that there's going to be a lot of calves are going to go right into the feedlots, as a lot of the cow-calf producers. I don't expect them to background very long just because of the prices that they're getting for these calves right off the pasture.
All right. Thanks for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.